Global implications of the strong dollar. We hit a one-year high on the dollar. You say that this perhaps raises the risk of FX intervention. What are you watching for?
Yeah, I mean, I think, whenever we've seen a strong dollar historically, that has huge ripple effects for the rest of the world. So I think something to watch kind of in coming weeks and months is really going to be the sort of jawboning and commentary we get out of central banks sort of globally around the world as they start to digest what kind of a sort of stronger dollar, not just in the short term, but potentially in the long term over the next 4 years, could mean for their economies and could mean for their currencies. We've already seen some unease, particularly in Asia, around, sort of a Trump presidency and what that means for the currency. But I think it's going to be very interesting to see what that kind of means for China in particular. I was reading a story this morning just about kind of a Bloomberg survey of economists, and more than half were saying that they expect to see China look to weaken the yuan as a way to kind of counteract those tariffs. And some were saying by as much as 10%, which would be huge. So I think you could potentially see a lot of rhetoric around kind of sort of how people are using their currency to sort of combat some of the sort of economic policy that comes out of the US. I think that's going to be something to watch as we sort of get beyond sort of the immediate aftermath of some of these big currency moves.
This is the Infineon press conference, the press note this morning as they put out numbers and the outlook for fiscal 2025 based on an assumed exchange rate of 110. Is that a little out of date?
For the euro?
Yeah.
Yeah, I think we're kind of starting to move towards conversations about parity. That seems to be the big conversation in markets. I mean, the euro is kind of being buffeted on multiple different fronts at the moment, obviously. I mean, they were already looking like the economy there was going to be weaker than potentially in the US or the UK, so more interest rate cuts required, so the euro taking a hit from that. Now we have the prospect of tariffs making some of that weakness even worse, and then you've got the political issues that are going on.
But that's almost a Chinese devaluation we're talking about here. That's a big kind of 10%. That's a 7, 8, 9% move in terms of the decline potentially we're going to see in the euro.
Absolutely, yeah. I mean, for the euro at the moment, we're around 106.
Yeah, so but from where we've come from.
Yeah, 100%. Yeah, no, well, not 100%, but maybe 10%. But yeah, we're really seeing kind of like people talking about a weaker euro for the longer term. And I think kind of the political headwinds that you're also seeing in Europe are being underpriced at the moment. I mean, all of this kind of sort of turmoil in Germany around the government, it's obviously had a big impact on bunds in the last week. We've really seen them kind of sort of reacting to the prospect of more borrowing by Germany. But there's also this underpriced risk of potential euro area fragmentation. You've got France quite weak politically, Germany quite weak politically. That potentially brings back the whole conversation about the European enterprise and whether it can kind of continue surviving.